We'll give it a few more seconds to see if anybody else comes in. When I do webinars, I am extremely interactive. And because of that, I need you to ask me questions. If you don't ask me questions, I just ramble on about everything. And that isn't really how I like doing them. Because I need you to tell me what you look at, what you want. But I've started off with the euro-dollar chart because I would assume that everybody looks at the euro-dollar. Am I correct? Perfect. Now, I'm not sure if you know, I think you probably do, but do you know how important it is to look at the dollar index when you're trading the euro-dollar? Any ideas? Anybody know? Hello, Gary, Portugal. Is that Gary, you live in Portugal? Or Gary, your second name is Portugal? Right, so we've got the idea. Perfect. You don't need to use it daily. You just need to know where it is if you're trading the euro-dollar. Okay, that's all. You don't need to look at it every single day, unless that's all you trade is the euro-dollar. Then you would look at the Dixie all the time. But if you don't, then, you know, keep your eyes on it every couple of days, see what it's doing. Now, let's start with the euro-dollar then. You can see that we've been in an uptrend in the euro-dollar for quite some time. Now these, I use InterTrader while doing webinars, and the only reason I do is that they are very, very easy for me to do. They are. And the trouble with the other platforms that I use is that they're not so easy to do. So at the click of a button, I can do anything on this system, and it, you know, it's very, very simple for you to see what I'm seeing. Don't worry, on my other screen, I have the proper one. Right, so euro-dollar, what have we done? There was a key in the euro-dollar price action. One, you can see as it topped up here. Two, look at what it's done here, okay? Now, I leave trend lines on for ages. I do, and I do believe, hello, Raymond, I'm not going to be able to, am I? Now, I'm in lockdown in Spain. Hi, Ray, hi. I'm in lockdown in Spain, and, you know, Lady Charmer, God, it's a long time since I've heard that. Chance of me getting to London is 0 and none at the moment. So, to see me, unfortunately, not even to see me, but to hear the dulcet tones of my voice, you have to come on to here. Now, the euro-dollar really did. This was a really weird day. I mean, it just went up. It hit my line exactly. You can see where I drew it on. Where I drew it on. I do, Ramon. I am in Spain. And it hit it. And this is why I leave lines on for ages, because you never know when they're going to come back into focus. So I leave them on, but obviously I'm not stupid. I don't leave them on like if they're really, really out of whack. I just don't do it. Now, with the euro-dollar doing what it did, where it went up, made higher than this, really, but not that. It didn't take that out. At 122.84, didn't touch it. All right, so when we went up this day, and we got to 122.43, that was stops over and above 122.30. And that's what I need you to understand, okay? Because now we use, I don't, but because now uses so many algorithmic systems, what happens is you get, they know where the stops are. They do. You know, that's their job. Their job is to know where the stops are. And if you don't know where the stops are, you can't place your stops accordingly. So the resistance in the euro was at 122.30. So you put your stops in at 122.5, 122.55, 122.60, whatever it is, how you can manage your own account. Obviously, you're not going to put them stupidly, but look, the next day we did just come down, and yesterday we broke just slightly the 120. Again, stops. You know, if you think of trading as so psychological, and it really is psychological, and I do believe this is where a lot of people come unstuck with trading, because they don't understand the psychology of the market. So these algos, you know, they're not, as you would think, AI to a certain extent, because they're programmable. So if you've got a program, it's written by somebody, and it has levels of which it needs to stop yourself out. It does. It knows patterns, it recognizes patterns, it knows where the stops are, it knows that there's a double top, it knows when there's a head and shoulders, it knows everything. It knows if you're in a continuation pattern. You know, it's a very clever little thing. And not only do we now, you as retail traders, have to pit your wits against what the world is doing in the $7 trillion that is traded in FX every day, you've now got to contend with this lot. You know, who knew? So you've got to be a bit on the ball. Otherwise, what's going to happen is you're just going to be part of that 85% that gets splattered every whenever, every week, every month, every year. You know, nobody wants that. No one wants to see that. So where is the euro dollar going after it's done that move, that it's done? So far today, I use moving averages, and I use them only as support and or resistance. So I look at that chart and I go, do you know what? That couldn't actually break through the 9-day moving average, which is at 121.11. And we've been stuck below the 21 moving average day at 120.95. So what does that tell you? For me, it tells you the psychology of the market doesn't want to go up. Not yet, it doesn't. Now, we've got the stochastics that have double topped. You can see here, they've double topped. Okay, so we've had that move down in there and that move down in the actual currency. I've changed the parameters that I use on stochastics now. I use 10 and 90, and the reason I do that is because where we used to use 75% and 30, 25%, we can't use that anymore, because markets quite often go to 25% and still go lower. So you use different parameters. You use 20, 10 and 90. That's the ones that you use, because then you know the thing is definitely overbought or oversold. So what we're looking for, we're looking for the euro today to stay below 121.16. If it don't, look to the next gravitational level. What have we got if we break above here? We've got this. We've got a little trend line that's coming in virtually at the exact level of the 55-day moving average, which is 121.48. So there's a lot of reasons why the euro will go lower. You want confirmation? We just turn and look. This is why I like this. We look at the Dixie. Okay, all sorts of screens up there, but look, same pattern. If you look at the euro dollar and you look at the Dixie, they are a mirror image of each other. Now the dollar index, which has fallen out of bed lately, in the last year, dollar index has fallen out of bed which is quite different to how you'd expect the dollar index to be. You would expect everybody, but everybody, to go leaping into flight of quality, for bonds to go up. You'd want everyone piling into the dollar and Swiss francs. This is what you would need. But it didn't happen. The dollar index fell. The dollar fell. It's not that, yeah, it is. Yeah. The Dixie is the inverse to the euro dollar. Now, it's not going to move tick for tick. It's not. So when you see that it's rising at the moment, which quite rightly you do, you know, look around at the history of the dollar index. Go back. Where's it come from? Look, has it made this sort of pattern before? And then puked. Yeah, we had that here. But if you go back in time, which you should always go back in time, because history really does repeat itself. So in what is known now as like the largest calamity mankind has ever known, that's about as much as I'm going to say on that subject. But if you look, you just didn't see the flight into the dollar that you should have seen. So there's a little pointer out thing. Also, looking at the Dixie, you're looking at, do you know what? Stochastics could be, not yet, because they're flat at the minute. They're converging, but they could be turning. So again, you want to go in and go, what is happening with my euro dollar? Let me check on the dollar index. And if you can see that they're the same, yeah, going up, got this thing here in the dollar index, as everybody should know, right? Bases take longer to form than tops. So you're always going to get another bite of the cherry if you understand that conception of markets. And that's just pure what you've gathered over the years as sayings in trading: up by the stairs, down by the escalator. And that is so true. It really is. And if you can keep to that little trading thing that we've had forever, then obviously you stand a fighting chance. So for some reason, people are quite happy to have long positions, but they're even happier to get out of them. Whereas people really want to be short of virtually every single market. So when it starts to look a bit shaky, they all pile out of the market. So it really is just, again, psychology. So I've done the euro and the dollar index. Is there anything else that anybody's interested in at looking at? Anything. Doesn't matter to me. Chart's a chart, it's a chart. So obviously it's much better if you look at cable. That's the way you said that. I am so sick of people going GBP USD. It's like, really? What's that then? Even I get confused. Cable. Now, little interesting one. I do silly things on these charts when I'm looking for something. If I'm looking for something, I put pitchforks on, I stick them in trend channels, I do all sorts of things. I always do them. Gold will be good. Yeah, let's get cable out the way. Yeah, I'll do that. But let's get cable out the way first. Now, the difference is with the euro against cable, so you're looking at euro sterling, right? But the difference is that this bar here, same as the euro, but this has followed through. Look, we touched the base of that little pitchfork line I drew in. And can you marry it up with other resistance? Yeah, which acts as support. Of course you can. Over here, you could see that the high was 138.61. Where did we go? Where was the low? 138.59. There's always a reason why markets do this. Always. They don't just move for dollar what? I'm sorry, Slack Co. I have no idea what that is, which is a bit strange for me, but I don't. And if I did know, I certainly haven't. No, I don't look at the Mexican peso. In fact, you're the first person ever to have asked me for it. But, you know, who knows? I might have a look at it. And I don't even know the code, to be fair. Never looked at it. And I don't really, on a webinar, want to look at something that I've never looked at before. But thank you for asking. Good. Right, back to cable. So, up we've gone, but look, we've been held by that 9-day moving average, coming in at 140.12. Our high, 140.06. You've got to also give it, you know, you've got to understand how these markets work. You really do. So if you have a resistance level, go 10 pips under. If you have a support level, go 10 pips above it. If there's a major chart point and you want to put your stop in, the algos are geared up to take out up to 30 points. Stick your stop at 40 points. You know, you've got to learn how to work within this market. Otherwise, all that happens is you just get topped and tailed at every single turn you take. And you know what? Nobody gets any pleasure at all out of the retail market losing money and not being in it for, you know, and 85% of you still losing money. Nobody in professional trading gets any pleasure out of that at all. So we try very hard to make sure that you don't get topped and tailed by telling you these little nuggets of information that say, do you know what? For risking an extra 10 pips, you're not going to get slaughtered. It is, for me, trading and charts is very basic, very straightforward. They have a set of criteria that's never changed in the 39 years I've been doing it. You know, people change, markets change, absolutely, but your basic rules of trading never change. So, if it's not broke, don't fix it. So we're looking at that. There's 2 reasons we're looking at, 3 we're looking at. 1, we're back within the channel. 2, we've hit the 9-day moving average. 3, we've hit the first line of resistance on that pivot, on that pitchfork. Now, there will be other reasons. You can use pivot point analysis. You can use Fibonacci retracements. You can use all of those. I use all of those. Once you start to understand what works for you and what doesn't, you can make a really good educated risk. Not by no means a bet. This is what they say, well, I bet it was going down or I bet it's going up. Don't use that. Take that word bet out of your trading terminology. What you want to do, these give you a greater understanding of what the big wide world out there is doing. And once you understand what the big wide world out there is doing, you can adjust your trading accordingly. You really can. Now, are we overbought, sold on cable? No, we're not. We are at 27%. We can go down to 10. We can go down to 7. We can go down to 6. If we go down to 0, we're not going below it. We're not doing an oil trade, and we're not going below 0. All right? So you know that if a market is really, really oversold, and still you get a little turn in it, you stick with the trend. Now, if cable closes lower tonight and goes down towards that 21-day moving average, psychologically, what is going to happen is all those people who think it's going higher will lose heart, and they will take a leap from their long position, because why would they hold longs if it looks like it's going lower? And if it breaks the base of that pitchfork and that 9-day moving average, and it takes out yesterday's low, 138.59, the next magnet level, and I say magnet levels because it's you've got to understand, I come from the life floor where you saw the herd mentality and you saw the trading that was going on. And what you'll do is you'll see the next magnetic level will be this. So it'll be down here, okay? So it'll be around one. Remember, cable loves 138.20 to 138, the figure, loves it. What have we got here? We've got this, where we couldn't break up from before. So you've got 137.58. So you've got your natural stop level would be below here. Because if it goes below, just below there, but holds this, remember, resistance becomes support, support becomes resistance. So down here, you're going to have people wanting to buy. If you put your stop just under this level here, you're going to get stopped out because the algos will kick in. So are there any other questions about cable apart from if it takes out 40.12, where's it going? It's going here. It's going to go, and again, cable does love that 40.80, 40.90 area, and it's psychological. It's just in front of 141. So are there any questions on cable before I move on to gold? Okay. I'm assuming that's a no then. Okay. So gold. Now gold. Thanks, Peter. Gold. You've got to go back in gold. I think you've got to look at the weekly chart. I don't think you can look at gold without looking about what it's done, where it's come from, what is the pattern, what is sentiment, what is going on. This is what you need to know. This is where it broke out, right? And believe me, that had been in there for a good few years. So this is where we broke out, and up we've gone. Now, to have this as a pennant triangle type of thing, what you've got to do is you've got to see where market sentiment is. And market sentiment, when it broke 1764, remember, when it broke it the first time, stops, went out at 1760, straight back up. So always, you need to go out, especially with something like gold, because gold has this characteristic of doing nothing and then moving. Okay, so with gold, I'd say monthly, you don't really need to look at the monthly chart. Weekly chart, you know, well, at least you don't know where it's been for years, but a weekly chart is enough, I think, for you guys to be able to get some sense of direction. So we look at the weekly chart and we look and we say, do you know what? Gold doesn't look too well. Now remember how much we turned off of this double top in the stochastics, divergence in the stochastics. Look, this turns negative off of neutral levels. There's your thing. You know, if gold was going to go up, it would not have broke 1760. So once you know that, you can then go to your daily chart. when I said this was an easy system to use, I meant just for showing you and quickly getting you to where you want to be. So, here we are. Gold broke 1760, and I've always used the phrases of doubles hold, triples rarely do. You know on the first go at that Fibonacci level and that prior support level and that prior resistance level. So it's not just fibs, you have to tie everything in with it. So you know that on the second time, it's mainly stops. If it goes down there again, you know you want to be short. So anything below 1760, short. And it never come back. Even on Monday, it didn't go back there. Got to 59, all right, that was a bit of an horror, but it did it. But, you know, when you look at where it went, I mean, we went down to, I do love this one, 1717, and I like things like 15, 15, 16, 16, 13, 13. That's just because I find them psychological. But look, gold went 1707, still that 7 number. Now, where is it going now? Well, it's gone way away from its moving averages. It's oversold on the weekly. It's not looking too brilliant on the daily. But, you know, you've got this over here, all this, 1691. But then look at all this area you've got. And remember, you're looking for tops and bottoms. That's what you're looking for. You don't just use Fibonacci. You scale your eyes across there and you get that within a band. So magnetically speaking, right, let me just move that little one down there. There you go. Magnetically speaking, the market has an area of which it's going to aim for. Now, you know, people ask me, and they do, how did you know? And it's not that I know, it's that I've done it for such a long time that I find it quite amusing when people don't know. And they don't know because no one's taught them. No one's actually took the time to teach them or do anything. You know, people want to sell you stuff. They don't want to take the time to teach you. Right, so my point is 1691, thereabouts. So 1695, 1688, in that area is where psychologically they want the market to go. When I say they, I'm talking about the Middle East. They do a lot in gold. I'm talking about China. They do a lot in gold. They do a lot in everything. But you've got to understand where these markets are going to go to, given the information you have. And the information I have and what I do has kept me in good stead and has allowed me to be charter trading for like very many years. And, you know, once you understand the psychology, it's not that difficult to understand trading. It's like anything you do in life. You've got to understand what you do before you do it. Understanding what you do by the time you've blown your account up isn't really good enough. So, is there any other questions in gold? Apart from what would gold have to do to change my mind about it going down to 1693 to 88? For me, it would have to close back above 64 2 nights in a row. I'll take the one night, but if it closed 2 nights in a row, then I'd be happy to go long looking for up here, which would be 1829, 1839, 1843 area. Yeah, could be. Yeah. Thank you, Gary. Yeah, it's magnetically attracted to buy cheap. To buy cheap. Yeah, I mean, there is a saying in trading, buy low, sell high, obviously. You know, if it was that simple, everybody would be doing it. What you look across at your area of magnetically what will attract it, it's a 61.8 of that whole move higher. Now, that is a magical level. You know, markets do retrace 61.8, not normally when they're trending, but they do. And if you understand that they will head for a significant next level, you're halfway there. You really are halfway there. And when you think, all right, we're at 1707, it didn't quite get to 1693 to 1688. But there's no reason, if that can't break higher above, as I said, that designated. I do, Gary. And the reason I do is because I always look at the 50, and in an uptrend, right, in an uptrend, you should be able to retrace 23.6 and stay there. And I never did it, really. It was always looking, as soon as we got down around here, always looking to break lower. Now, once it breaks through your 38.2, thus, you look to the 50%, but you also look at market conditions. Is it oversold on the weekly, on the daily? Is it turning? What does it do? When it went down there the first time, it closed a bit higher, couldn't stay down there. Markets tend to bounce off of significant levels a lot. As I said, you go along, you look at that. There you go. What was that? 1765, 1764, close enough. Okay? And then it went screaming up again. And what it did, it didn't quite make it look this high. 1965, this high. 1959, it couldn't do it. So you were automatically alerted to the fact that it couldn't break its previous reaction high. I'm not a retail trader. I won't call it a swing level. Okay? Me, it's a previous reaction high. Now, when it can't do that, and let's be honest, once it broke out of this and hit there, that was a complete nothing day. So although we had a key day reversal here, we had nothing really the day before. So there is your, okay, it's going to go lower, agreed, but is it really a viable one? Let's look at tomorrow's action. The rest is history. Couldn't get back above that 1929, and we puked. So, knowing what this little tinker is like, this is the characteristics of gold. Nothing, nothing, nothing. Puke. Puke. Nothing. Up, can't do it. Down we go. Nothing. Down. Tried. Above the 200-day moving average. Couldn't do it. There's your double. Couldn't get above that. And the rest is history. Now, once it breaks that 50% on the third attempt, your eyeballs go to the magnetic 61.8. What can you see around there? Loads. Loads and loads and loads and loads and loads. Now, at 17% oversold, gold ignores anything like that. Doesn't bother. It really doesn't. So, gold can be overbought, oversold, doesn't matter. Till we get towards zero. So we're looking at gold. Do I feel the urge to rush out and buy it now? No, not really. Had a good close yesterday, bad one today. You need 2 days. That's it, you do. You need 2 days. If you don't get those 2 days, bye-bye, you know, don't do it. Leave it alone. So, yeah, I think it's going to go lower. You know, might need the market to actually catch up with me, but I've advised all my guys that trade gold, sell rallies at the minute. Have we finished with gold, or would you like to look any questions about gold before I move on to something that you might like to look at? I think I've got 45 minutes. I'm sure FX Street will ping me and say, no, get off. I'm sure it will. Anything else that you would like to see? Any other currency or stock market? Which have all been extraordinarily. Well, there we go. My favourite little baby. I love the S&P. I traded that at the banks when the S&P was big points. Big points. 75 bucks a tick. Oh my God. Now it moves in quarters. Happy days. No. After S&P, can we look at DAX? No, I don't look at DAX. Ever. Oh, you're a Yank, Gary. Yeah. Steve. No. Anybody that knows me ever knows I don't look at the DAX. I don't like it. I don't like how it works. I think retail traders trading it are suicidal. I think that's a big reason that the losses are accrued. Did I? Huh? Yeah, it is my pet hate. Actually, you could have asked worse. You could have said, can I look at the DAX on a 5-minute chart? And then I would have just dropped dead of the heart attack. Right, S&P, great little market, loves technicals, absolutely adores them. Now, I put channel lines on and fib extensions on, okay? So I don't do them as they should be done. I know. That's why I've never written a book. And the reason I haven't is because I can't tell in a book the things I've learned in 39 years, because I've put my own stamp on them. But there is a criteria to the S&P and the Dow and the NASDAQ, is that it will again aim for big levels. Look, you've got your 50% fib extension at 39.43. Always expect it to overextend. We went to 39.50, okay? And down we go. But look, you have to put on your extensions and your retracements. And we only retraced back to 23.6, okay? That was at 37.80. We got to 37.89. So when it pukes, and it's the same as any market, up by the stairs, down by the escalator, when the S&P pukes, it's going to puke more than what it's gone up. I don't mean in a daily basis. I mean, it goes up, then you have the big move down, up, big move down, up, big move down. Do you know what I mean? It does that. It grinds higher and falls. Now, with the S&P, unless it gets above, and I've got to sort of assess this today, 39.15, to give it 39.20 to be safe. Look at Monday's high. That high was 39.14, so not too bad with 39.15. Right, remember these algos are going to have these areas ingrained in their little head. So it didn't have a good day yesterday, not at all. Monday had a great day, after Friday having a bad day. But look, it held, and you had two big levels. You had a Fibonacci extension at 23.6 and a 23.6 retracement at 37.80, 37.86. It was, the low was here. Okay, let me just get it on there. 37.89. So these integrated fib extensions, fib retracements, using everything else, work. So when it held both the fib extension, which used to be my resistance, when it held that and the retracement, you have to guess, no, you have to gauge the mood of the market and think, do you know what? It doesn't look like it wants to go down. So what can't go down does what? Goes up. And really, guys, it is that simple. It really is. And we closed just at what? 38.70. I don't look at what it does in the overnight market because I've worked on Wall Street. When Wall Street speaks, we all listen. So if you're trading S&P, you really only want to come in when the states are in. You don't want to come in through the middle of the night. Wrap it up in 5 minutes. Okay. All right. Well, that's 3 minutes because I never looked. Is that enough for you to look at the S&P of still going higher? Take out 39.15. I think we're going to go test the highs. We take them out. We're going to the top of that channel there. Then we use only fib extensions and pivot point analysis. So if we take out the top of that channel at 39.85, you're looking at 40.13, which is the 61.8 fib extension. Massively important, the golden magnetic level that will entice our prices higher. I would expect 39.50 to hold on the second attempt. I would. Okay? If it's going to break, you buy it on the third attempt. Third time it goes, that's the time you buy it. So we're going to wrap that up now because FX Street obviously have a timescale to stick to. So hopefully you've all enjoyed it, and it's been really great having the ones that have spoken on. I'd like to thank you very much. Any questions, just ask FX Street. They know how to get hold of me. Okay, am I done? Perfect. You're more than welcome. Thanks, everybody. I'll have a really good day. Yeah, I will. Okay. Enjoy the rest of your day.